All right, welcome to our explainer. If you're running a business or you're a professional in India, there's this magic number you've got to keep in mind. If you cross it, you are legally required to get something called a tax audit. So, what is that number, and what does this mandatory financial checkup really mean for you? Let's dive right in and break down Section 44AB of the Income Tax Act. Okay, so when you hear tax audit, don't immediately think of some scary interrogation. It's much better to think of it like a mandatory health checkup for your business. It's a process that's really designed to make sure all your financial reporting is accurate and compliant. It helps you catch those small issues before they snowball into huge problems. It's really all about financial wellness, not just another piece of bureaucratic red tape.
So, first things first, what in the world is a tax audit?
At its heart, a tax audit is a really systematic review of your books. An independent auditor goes through your financial statements to verify one crucial thing: that everything you've reported, your income, your deductions, your taxes, is all accurate, fair, and most importantly, totally in line with the law.
And look, this isn't just some top-down government rule. This is actually how the Institute of Chartered Accountants of India, the ICAI, frames it. They see the audit as a tool to give you, the taxpayer, confidence. The whole point isn't to catch you out. It's to make sure that you can navigate all these complex rules with some real clarity and certainty. Okay, so that's the what. Now for the million rupee question, or, well, in this case, the 1 crore rupee question. Who exactly does this apply to?
All right, so here are the key numbers you need to remember. For a business, if your annual sales or turnover goes over 1 crore rupees, boom, an audit is mandatory. For professionals, that line in the sand is 50 lakh rupees in gross receipts. But, and this is a really important detail, the government is trying to encourage digital payments. So if your business is mostly cashless, these limits actually go up, giving you a bit more breathing room. Pretty neat, right?
You might be wondering, what exactly counts as a profession? Well, the law is actually pretty broad. It includes this word vocation, which basically just means any way you earn a living. So this isn't just for your typical doctors and lawyers. It's a huge umbrella that can cover consultants, freelancers, content creators, you name it. All right, so let's say your business has crossed that threshold. An audit is on the horizon. The big question is, who can actually do this for you?
Yeah, you can't just call up any accountant you know. The law is super specific about who gets to sign off on this really important report.
And that person has to be a chartered accountant, a CA, who holds a valid certificate of practice. Think of it as their official license to perform these kinds of high-stakes financial checkups.
So what does the CA actually do? Well, their job really boils down to 3 key steps. First, they take a deep dive into all of your financial records. Then they meticulously check everything to make sure it's accurate and follows all the tax laws. And finally, they wrap all of their findings into an official report, which gets sent straight to the tax authorities.
Okay, so when that auditor starts digging into your books, what are they really looking for? Let's pop the hood and take a look. You know, this isn't just some random fishing expedition. The audit follows a very strict roadmap, and that roadmap is called Form 3CD. This form is basically a super detailed checklist that guides the entire audit process. And this list here, it just scratches the surface of how detailed that form really is. The auditor has to report on everything from the accounting method you use to the depreciation you've claimed on your assets. They'll look at payments to family members, any big capital expenses, details on loans. I mean, it is a thorough financial deep dive. They look at everything. All right, let's get to the bottom line. Why does any of this even matter? What are the real stakes here? You know, it really comes down to a fork in the road. On one path, you've got compliance. That means peace of mind, accurate returns, and just a solid reputation. But on the other path, well, ignoring this is risky. We're talking about some hefty penalties, getting on the radar of the tax authorities, and here's the kicker, they might even disallow some of your perfectly legitimate expenses, which means your tax bill could skyrocket. So, we'll leave you with this to think about. Is your business's financial health as clear on paper as it is in your mind? A tax audit isn't just a hurdle you have to jump over. It's a tool that forces you to get that clarity. And at the end of the day, getting this right isn't just about dodging a penalty. It's about building a rock-solid, transparent foundation for your business's future.